All right, guys, as you know, the market is falling quite a lot right now. So maybe not the best time to talk about Cathie Wood stocks since, she tends to invest in much more riskier, speculative type of stocks. And yeah, those tend to get devastated during market downturns. But I actually think it's going to be kind of interesting because a lot of her stocks are probably going to be going down right now with the market downturn that we're experiencing. And that makes it a little more interesting to look at, a little funner to look at some stocks that are actually going down in price. Now, Cathie Wood, I talk about her because she's an interesting, rich investor. She's one of the more interesting ones, in my opinion. Now, she's the founder and CEO of Ark Invest, who primarily invests in what they feel are disruptive companies for the future. However, these, of course, tend to be much higher risk than most of us are probably used to, which tends to draw some criticism. And while I certainly look for some disruptive companies myself, the majority of my own portfolio rests in much larger, very profitable, safer companies like, for example, Google, Amazon, Microsoft, a bunch of dividend payers, other stuff like that. The majority of my money is in those type of stocks, which are also getting hammered right now too. Everything's kind of getting hammered right now. But from there, from that core foundation, sometimes I'll add some riskier, more growth oriented companies where I see fit. And maybe your own style is similar to mine, then more similar to mine than it is to something like what ARK does, which is, a little riskier. However, I will say though that I actually give Cathie a lot of respect for two main reasons. This is why I find her interesting. Number one, she's one of the very few kind of rich elites out there that actually releases all of her stock trades as soon as she makes them, whereas other giant investors only release theirs because the SEC like forces them to every quarter. But with Cathie, we actually get to immediately see what she's buying. That's number one. Number two is that she also sticks to what she preaches. Many disagree with her strategy, but at least you have to respect that she actually puts her money where her mouth is, and she buys what she feels are disruptive companies for the future. And rather than focusing on what the market does on a weekly or even like monthly basis, she tries to look out further down the road and actually buys her stocks when the market is even falling to get as low of a price as possible, because again, she's looking out many years into the future. So she sees what could be happening now as actually, maybe a buying opportunity for her, at least for her strategy. And well, it just so happens that right now is, of course, one of those market downturns where everything's kind of cratering. So in today's video, we're going to run through 5 of the largest purchases that Ark Invest has been making over this past month or so. It's about a month here. I'm going to look through the 5 pretty much biggest stocks that purchases that she's been making out there in the market. And we even have data like literally just from yesterday. So, because she posts all her stuff all the time. So anyway, I know that it's a lot of fun when we do these videos. I know you guys like them. What we do, I just kind of give you my quick opinion on each of the 5 biggest purchases. And I even rank them from best to worst too, based on my own opinion. So that's what we'll be doing today for Cathie Wood's 5 largest purchases here. So let's not waste any more time. Let's go ahead and jump into this list here. Now, starting from smallest to largest purchase. You know what, guys? Actually, to my surprise, the first stock on the list was actually one that I own myself too. A little bit of a shocker here, and that was in Baidu, ticker symbol BIDU, which Ark spent over $12 million of this past month. And I believe it was actually like a brand new addition for their portfolio too. I think they didn't have it right before this. Now, why do I own Baidu myself too? Well, like I've told you many times, Google is probably my most favorite stock in the entire market right now. And Baidu is basically the Chinese version of that, with not only the most market share of search in China, but they're also 4th in digital advertising. They're number 1 in cloud AI, and they even have various other ventures too, like autonomous driving and more, very similar to what Google does themselves. But the biggest thing that I like about Baidu, and my theory for why Cathie likes it too, is that they literally have the most AI patents of any other company in the entire world. And we all know just how big AI will be in the future. So to have that much AI technology with the cloud to power it and all the data that you'll probably ever need as a resource for AI from their dominance in search and advertising, well, I just think Baidu is set up to be one of the biggest players on AI long term. However, I also consider it to be a high risk stock that I only allocate about like 3 to 4% of my portfolio because of a number of factors. Number one, they have a VIE structure because they're a Chinese company and stock, meaning if, SHIT hits the fan, well, outside investors like you and me could be left holding onto nothing. And number two, I don't know if you guys have heard, but there's a bit of a trade war kind of brewing here with rising tariffs, which may not bode well for the Chinese market. Now, I'll grant you that Baidu itself may not be directly impacted by tariffs, as most of their business is primarily done within Asia. And again, most of it is going to be digital, which also tends to be excluded from most traditional tariffs. However, where I see this potentially becoming a bigger problem for them is if tariffs weaken the Chinese economy itself, causing advertising rates to fall and thus kind of trickling down into Baidu's margins, which is a very real concern. Now, having said that, the stock is down huge from the top and is even negative over the past decade by more than half of its entire value, leaving a dirt cheap PE ratio of only around 10, which is also around 30 to 40% cheaper than the sector median, despite, again, this being, a pretty dominant company, all of which I do think is very attractive for the long term. But because of the trade war concerns, I think it remains pretty high risk at the moment, for the kind of short to medium term. Lower prices could be coming. Thus, I'm going to rank it around the middle at number 3, even though I do like the stock long term and I do own it myself too. All right, moving on to the second biggest purchase here, or we're moving up in size here. Once again, I'm actually pretty surprised by this one, as I actually don't think it's quite as risky as maybe I was expecting of a stock, but that was in Advanced Micro Devices, otherwise known as AMD, ticker symbol AMD, which Cathie picked up over $17 million more of recently. And yeah, I actually kind of like this pickup here. I would obviously be worried about tariffs, especially in the near term, since almost a quarter of their sales come from China, hence why a lot of investors are really freaking out about AMD, and I think that's warranted for sure. But longer term, I just feel that AMD does have a fantastic opportunity to kind of market themselves as a little bit of like the budget alternative to both NVIDIA GPUs and Intel CPUs, both in things like computers, personal devices, as well as the data center, which, tariffs or not, that market should only grow larger over time with the rise in artificial intelligence. Even now, you have most companies basically buying up as many advanced GPUs as they can really get their hands on to train and operate these massive AI systems. In fact, last quarter, AMD saw so much demand that they had around 70% growth in both their data center sales and profits, despite that already being their largest segment. And going forward, analysts project total sales to continue growing for AMD in the coming years by at least a 20% annual rate, with soaring profits too. By the way, this surge in EPS that you can see on this chart here that's expected from analysts, it's leading to actually a very cheap valuation because the stock has crashed by so much. It's lost well over half its value given the rising risk of a trade war and a possible recession. Well, it's leaving them now with a PEG ratio that is only less than 1, and is also more than 50% cheaper than the sector. Again, that's because of the combination of a falling stock price with rising EPS that gives you a price to earnings to growth ratio that is actually quite low. Obviously, no one knows when the perfect time will be to be picking up this stock here, but I gotta imagine that if we're looking at, 5 years down the road, this would have probably been a pretty good kind of time period to be picking up AMD stock at these levels. I don't own it myself. I own NVIDIA instead, but I like AMD. I gotta say, I like it at these levels. The more it falls, it gets even more attractive. And I do think that it's probably safe, maybe safer long term than Baidu, just because Baidu is a Chinese stock. So I'll rank AMD higher than Baidu at number 2. All right, guys, moving on to the third purchase, though. We have a stock that I don't think I've ever even covered before on the channel, and that is GitLab, ticker symbol GTLB, which Cathie added another close to 20 million more dollars of in the past month. But yeah, this one actually, it's not as big of a surprise to me. GitLab does feel a bit more like a traditional kind of Cathie Wood type of stock, one with a lot of technological promise and future growth potential, but with a bit of a premium price tag and lack of gap profitability. Although they have made a lot of progress on that front this past year, nearly breaking positive on net income in 2025 with more than 30% revenue growth while improving their net income losses by 98%. If you've never heard of this one, though, they're actually a fairly popular software company that specializes in what we call DevSecOps, which really stands for development, security, and operations, basically helping customers develop their own software platforms that integrate those three things, among other things too. But with the rise of AI, which GitLab has also integrated into their own services, helps other companies with as well. Well, they've actually seen rising demand with more than 50 million registered users now and soaring sales above 30% and even positive free cash flow that climbed from around 33 million up to 120 million dollars last year, although that is an adjusted figure. Still, considering the cratering stock price that has now lost well over half its entire value since IPO, I can definitely understand why Cathie would want to jump on the train at this particular time. Valuation wise, it is a bit of a mixed bag though. You'd have to consider a few things like, for example, their price to sales ratio is around 8. That's over 200% higher than the sector. But their PEG ratio, looking further out down the road, when they start, generating GAAP profits, well, it sits at a much more reasonable 1.6, which is almost the same as the sector. And considering this is, again, a high growth software as a service company, one that should be very profitable down the line, well, that valuation there is actually more attractive than you might think. And I would even consider picking up this stock myself too as like a small speculative stock if it continues to crash as much as it is right now. But at the moment, I still think AMD and Baidu are probably a little safer here. So I'm going to put GitLab right under them at number 4. All right, guys, that'll bring us now to the final two purchases of the list. These were the largest of the bunch, and coming in at number 4 is actually another stock that I don't think I've ever covered before on the channel, and that was in Beam Therapeutics, ticker symbol BEAM, which Cathie picked up over 25 million more dollars of. Now, this one, I'm going to say it's definitely not a surprise for me that Ark is investing in this company because they're a gene editing company, and we all know how much Cathie loves her gene editing stocks. Now, that's absolutely the case for Beam Therapeutics. They were founded back in 2017 with the goal of providing lifelong cures to patients suffering from serious diseases, specifically by using a class of gene editing called base editing, which is also referred to as a molecular pencil, in that it's able to erase and rewrite a mutation rather than slicing it out. Now, unfortunately, as promising as these methods may be for the future, they're all still kind of going through various clinical trials, as is the products that Beam Therapeutics has in their pipeline. Although I will say their lead pipeline candidate called Beam 302 did at least show positive initial results just last month, which, anyone invested in Beam should probably be excited about. But still, this is a stock that, anyone picking up here is really betting on just very long-term results, as the company even posted larger losses than they even generated in sales last year. And that's a hard pill to swallow for anyone owning a stock like this. Hence why the stock itself continues to crash after having already lost about 90% of its entire value from the top, coming off of those pandemic era highs. Now, don't get me wrong, guys. I do think gene editing will play a huge role in the future of medicine. So I'm not at all against owning a small piece of one of these speculative gene editing stocks right now, just in case for the future. But I don't own this one myself. I think it's very high risk, especially in this current climate that we're in with the market. And if I'm forced to rank it on our list, I'm going to have to go with putting it under the rest of these at the bottom at number 5, since those other stocks, at least have actual products out on the market that generate actual money for them. All right, guys, that's going to leave us now, though, with the final purchase, the biggest one of all. And to my surprise, it's actually one that I do own myself, too. Granted, it's one of my smallest speculative stocks, but still pretty interesting here that Cathie was purchasing more of it, too. And that was in Robinhood, ticker symbol HOOD, Hood, which she picked up another 28 million more dollars of. Now, Robinhood, I gotta say, it's right up there with SoFi for me as really my two favorite investing platforms, offering not just commission-free trading for stocks, but also crypto trading, options trading, IRA accounts, banking services, even a credit card, and more. And because Robinhood was really the first to kind of pioneer commission-free trading, they've also been extremely popular among younger generations, which continues to grow, having now reached over 25 million funded customers who they're also trying to cross-promote their gold subscription service to with rising adoption rates. And all of that has actually led to some pretty strong financial growth, with last year, for example, seeing revenues soar by 58%, while net income skyrocketed by over 300%. However, the concern now is that with the stock market falling, and especially, if the economy tanks, if we go into a recession, Robinhood's financials could be in for a major hit, a major blow, because that's literally what their entire business revolves around, is the health of the economy and the financial markets, people actually using Robinhood's products. So if all that starts tanking and they don't use it, well, yeah, that's going to hurt them. And hence why investors are so worried about Robinhood stock now, and they've been kind of selling out of it. This past month, for example, it's lost well over 20% just the past month alone. However, I will say if you zoom out a bit, you can actually see that they used to trade for only a single digit a couple years ago, and they have since soared by close to 400% from those lows. Even I myself am up over 200% on my own position from the lows that I bought in at. And so at today's higher levels, while I do still like the stock long term, I believe in what Robinhood is doing, it's just one that I'm not feeling compelled to rush out and buy when the market itself is on such shaky ground, and I'm also up on my position by quite a lot. Again, I do own it though, and I will rank them higher than GitLab or Beam, but not quite as high as Baidu or AMD, who I just think is a little more attractive at the moment. So I'll move those up one spot to fit Robinhood in the middle at number 3. But hey, there you have it, guys. Those were 5 of the biggest purchases that Cathie Wood has made this past month. What do you think? Let me know down below if you agree with my ranking, or would you make any changes to it? I'd love to know that as well. But I've got more videos coming out for you guys. It's going to be a busy, volatile year, I can tell you that much. So I'll be here with you guys every step of the way. I'll be making more content for you guys. Don't worry, we're in this together. But hey, stay safe out there, guys. I wish you the best of luck with everything you're doing, and I will catch you in the next video. All right, take care, everybody. Bye-bye.